Hello and welcome to this video. So this video is going to be on a step-by-step beginner's guide to investing. So I've been investing for about a year now and I've learned so much, and I thought it was time to make a video on how a complete beginner will start in investing. So just before I start this video, I want to say that I am not a financial advisor, so this is not financial advice. Also, there will be an affiliate link for what I'm talking about, and if you use that link to sign up and you top up £100, you get £25 completely free, which I think that you should do. So recently, one of my kind viewers actually pointed out towards this new trading platform called InvestEngine, and they gave me the referral link, and I immediately just signed up because it was FSCS protected. And so before you start investing, you should know that there are a lot of scammers out there when it comes to investing. But when something is FSCS protected, so Financial Services Compensation Scheme protected, it's protected by the government up to £85,000 per account. So just knowing this, that it's FSCS protected, just gives you that reassurance that it's actually not a scam. So anyway, I received a referral link, and if I topped up £100, I got £25 bonus, and that's exactly what I did. So I have a fresh account with £125 on the account, and if I was a beginner, like a complete beginner, I'm going to tell you how I would invest. I also have other investments in Vanguard Asset Management, the actual Vanguard website, and I have also free trade. But if you wanted to sign up to free trade, I also do highly recommend that. It has very low fees. But this new trading platform called InvestEngine essentially uses algorithms to you can move sliders to show you how much risk you're willing to take, how long you want to invest and stuff like that. So we're actually going to check that out, and I'm going to put all the money that I have in it into something. Not necessarily maybe the best investment, but in a few months we can follow up and see how that investment went. So if you want to see how that goes, make sure you stay subscribed and you will see whatever I put my money in, which today is probably going to be a high risk, just to show you that maybe high risk isn't the best strategy, but I'm going to do something very high risk whilst telling you not to do this and invest in the S&P 500, of which I have invested lots of money in. And if you want to see a follow-up video, stay subscribed. Also in the comments down below, let me know, and I will make a video showing you my other portfolios that are a bit safer. So anyway, without further ado, let's get into InvestEngine. So now I'm on my computer and you can see the InvestEngine logging screen. So I'm just going to log in and I am met with this dashboard. So currently it says my dashboard and it says enhanced personal 125. So what does this mean? So this means I have £125 of real money inside my dashboard, and it allows me to spend this money on certain investments. So let's just check out what other menus InvestEngine has. So analytics. So this basically tells you a lot about your investments, like what countries they're targeted around, what sectors, what kind of holdings you have, so like what kind of actual individual stocks you have within your portfolio and what kind of asset classes. So you have equities, bonds, alternatives, and cash. So cash is quite self-explanatory. It's how much money you have as a reserve, so how much money you put in your account. And cash can be quite useful as a part of an investment portfolio. So if you're new to investing, you might be thinking, what is a portfolio? So your portfolio, whether you're thinking about like an art class, you have your portfolio, it's your history of things that you already own. If you're showing off your portfolio, these are things that you can actually have to show. Like for example, for art, you have a portfolio of different paintings you have. So this is your entire collection of things. And you can have different asset classes such as equities, so you own a share in something tangible. You have bonds and alternatives. I'm not going to go into too much in that because it's quite higher level things. So there's also a tab that says transactions. So as you can see, I put in £100 and I got a bonus £25, and you can also do that if you use the link down below. We have reports, and let me just tell you, this is a fresh account, so there's absolutely nothing on it. How do we invest? So it says here, add new portfolio. So we'd go into that and we'll see what our options are. So it says choose investment service. So there's two options. Do it yourself, pick and manage your own investments for free. What it means by free is that there are no fees when picking individual stocks and shares, which is amazing and why you should actually use InvestEngine. So you can create a DIY, so do it yourself portfolio. So your portfolio is managed by yourself, so you can pick and choose whatever stocks you want, which for beginners is not the best idea unless you're investing in index funds, which I'll talk about in a bit. But there's also managed for you. So this is what makes InvestEngine different. You can choose different sliders and different managed funds, and you can kind of tell the engine like what you're looking for, and it does this engine mathematics and gives you a fund which is very unique and personalized to yours that will do how you are expecting it to do. And this is exactly what we're going to dive in today. But just before that, I want to tell you that you can do your your portfolio by yourself and what you should expect when doing your portfolio yourself. But I'm not going to put money into this. I'm going to put money into one of their managed ones, and see how it is in a few months, do an update. So do it yourself, create DIY portfolio. So there's two options. One is called an ISA and personal. So if you didn't know, if you're from the UK, every year you have an ISA allowance of £20,000, which means you can put £20,000 and any return that you get within your ISA, so a stocks and shares ISA, you are not liable to pay tax. Let's just say what you had a 100% gain and you have another £20,000 on top. That's all tax free and it's all for you. So you should definitely look to max out your ISA every single year. And the ISAs go from 5th of April to 4th of April, so around 4th or 5th of April every year, so they reset. So currently you're in the best position now if you have 20 grand lying around to put into a stocks and shares ISA, and then within the next month you can put more money in. So you can have essentially £40,000 within the space of 13 months, which you should definitely look into. But anyway, I have already maxed out my ISA for this tax year, so I can't actually use ISA, so I would use personal. So in a personal account, you are liable to pay tax. So you pay something called capital gains tax. So whether it's selling an art piece or a house, when you make a profit, you basically pay tax on top of that, which I know is long, but the tax-free allowance for capital gains tax is around £12,000 a year. So if you're just new to investing, you're probably not going to even hit that. So you can go for a personal account, but if you're new into investing also, just go for a stocks and shares ISA. So I'm going to go into personal, because I don't have an ISA for this year, and it comes up with around 410 ETFs. So ETFs are actually managed index funds, and you have things like the S&P 500. So the S&P 500 is the top 500 companies in the US, and as you know, the US is a global superpower, so usually when the US is doing good, the world stock market is also doing good, and they're a good bet to have because their economy is strong and also their defense is really strong. So it's very unlikely that the USA is going to get invaded anytime soon, although like current situation and stuff like that, you never know what's going to happen, but it's very unlikely. So a lot of companies, even international companies, will invest in American exchanges because they have historically always yielded very high returns, and essentially instead of picking individual stocks and shares, which is very risky, and I've done that and I've lost thousands of pounds. So instead of doing that, I would definitely recommend putting your money into the S&P 500. Now I am going to go into an S&P 500 index just to show you kind of what it looks like, and I'm just trying to find the Vanguard one. So I have lots of money in the Vanguard, so I can just type in Vanguard 500, it should come up. Yep, there you go. So there's actually two different types, and I'm guessing the difference is between giving dividends and one that reinvests dividends. So if you don't know what dividends are, essentially dividends are when a company does well and makes profit, they will give a share of that profit out to the shareholders, so people that have shares in their company. This is a good way for a company to allow their value to increase, because people are more likely to hold on to their stocks if they are receiving something from it. Instead of having to sell it for a profit, they'll actually receive a percentage, which is win-win for everyone, and it means you'll probably not sell your shares as quickly. So I'm just going to go to this one, VUSA. I would recommend just putting your money into this. So as you can see, the current price is £61.95, and this is a very similar price to the S&P 500 in free trade. And it's just a tiny bit more, I think, but they have less fees. So as you can see, historically, since 2017, it's just always usually just goes up, because inflation is the thing. If you haven't watched my video on inflation, make sure you do that. But every year you'll know that things go up in price, and stocks and shares go up in price too. And especially when you have an index fund that's managed and historically has done really well, it's likely to go up in price too. But as you can see, there sometimes is a dip. But the reason why you want to invest long term is because you can override these dips. So say you are very risky and you bought here. So you bought at £47, and you know the next month it dips down to 37, and you're thinking, oh my god, I'll sell it. So as a risky investor, you'll lose your money. But if you kept holding 47, in a few months it goes up 50, 60. So yeah, definitely do not get into investing if you're thinking, oh, I can make a quick buck. This is not day trading. This is what the more scammy type of people do, the day trading. But this is not about day trading. This is about investing for a long term, for growth and beating inflation. So I would definitely recommend just buying lots of Vanguard S&P 500 and maybe set up a monthly order of like £100 and keep buying that. That way you do the dollar cost averaging. Basically, it will go up and it will go down. But if you buy it every month, you're buying at different prices, and essentially your portfolio will just grow in number, and also not just the deposits that you put in, but also that it will gain interest. And if you know anything about compound interest, within 10, 20 years, the money that you think you would have, maybe, what if you put £6,000 in, you might expect to have maybe 10,000 by the end of 20 years. But actually the way the compound interest works, because when you reinvest your funds, it grows and grows and grows, and suddenly there's an exponential increase, and maybe you'll have like 20, 30, 40,000 pounds. It's crazy. Just look up exponential returns or compound returns, and you will see that if you invest over a 40-year period, you can literally become a millionaire just putting a few £100s in per month. So definitely do that. It's definitely for the long term and not the short term. So if you're new and you want to start InvestEngine, I would just recommend getting the Vanguard S&P 500 and buying as much as you can afford, essentially. That is the easy strategy, and that's the one that's been recommended to me by other YouTubers. But if you want to know more, I would recommend just YouTubing the actual asset class, or YouTubing the actual stocks and shares, so the different index funds, and actually seeing how they perform historically and then making your decision and getting that. But I definitely will not recommend getting individual stocks and shares, for example, just putting your money into Apple and stuff like that, because if a company's share value hits zero, you lose all your money, and you do not want to do that, even though it's very unlikely that Apple will go down like that. We said we're here to actually put money into the InvestEngine account, and we'll do that now. So I'm just going to cancel. If you want to know more about this, just let me know and I'll make another video about how to invest your money into index funds, and also have a video on revealing all my investments. Make sure you do watch that, because it shows you my different investments and the kind of mistakes that I made along the way as well. But I've learned a lot since. So I've just cancelled that, and I'm going to go back to add new portfolio, and I'm going to go to the managed for you. So it says here, managed for you. InvestEngine builds and manages an investment portfolio for you. Okay, so create managed portfolio. Select an account. Again, I'm going to press personal because I don't want to put my ISA in here for now. Select portfolio type. Ooh. So there's growth and there's income. So growth is to invest in a managed portfolio for longer term gains. And this is probably what I recommend. So long term is quite good, but you can also invest for income. So income, invest for regular income of up to 1.3, 2.3 or 3.4% a year. Wow. Okay. So instead of putting your money into a bank, it will lose money because of inflation, you can put it into these fund types. And what I like about it is that it's not promising returns of like 16-20%. It's been quite upfront, 1.3, 2.3 or 3.4. So I'm tempted to try both. You know what, for the purpose of this video I'm trying both, so let's try create growth portfolio and see what the difference is between the two. It's going to be a long video, so I do apologize, but if you find this useful, make sure you subscribe and comment and let me know of any other videos that you want me to do. So here it says I would like to invest. So it says here our fee is only 0.25% a year, which is fair because that's a whole year and that's a very low fee, and it's actually much lower than anything else you're going to get. So I think that's quite fair for a year. We'll use this to build your portfolio, but you can always change the amount before you commit. So I would like to invest. I'm going to go all in so far and see if this one is better than the other one. So let's continue. It says what proportion of your total investable assets will this portfolio represent? So of course it's going to be 0 to 25%. So they kind of ask you these questions to see what kind of risks you want to take and stuff like that. So it's quite useful for brand new investors that don't know what they're doing, that it will kind of ease you into it and give you some reassurance. So select your annual income after tax. I'm going to go for this one, 25 to 50,000 pounds, because it's about right. Select your investing time frame. So there's short term, medium term, long term. Okay, so I am a bit of a risk taker, but medium terms more for house purchases, education fees like university fees and weddings. Long terms are for retirement. Oh, I don't look that far into long term, so I'm just going to go for short term. What is more important to you when investing? Minimizing losses, maximizing profit, or both equally? So I really have to tell you, this is a very important thing about investing. You have to really speak to yourself and think, are you willing to take the risk? Your capital is at risk, okay? When you put your money into a bank account, there's actually little to no risk that you're going to lose the money, because that's how banks work, right? But when you're doing investing, your capital is liable to risk, so you could risk it all, even though that's very rare and only really uninformed investors lose everything. But there will be losses, 100%. You cannot invest without losing, at least in the short term. So definitely, if you're weak-hearted, get into investing, put a little bit of money and see how it builds your character. For me, more important, I would say maximizing profits, so I don't really care about losing it. And £125 are not a lot. anyway. So we're going to go with maximizing profit. What would you do if the market takes a downturn? That's another great question. So a lot of people are emotional when it comes to investing. So when when they see minus 1%, 2%, they just sell everything. It's the whole all or nothing mentality. And yeah, that's our instinct telling us run. But usually if you just held on, you would have made a profit. So you could sell all your portfolio, sell some of your portfolio. So usually people that are putting the money that they need, they sell their portfolio when, you know, the stocks take a downturn. And this is probably rule 0.5 in investing. Don't put money that you need in the next few months, 2 years. Just don't do it, okay? The other thing is wait, or in other terms, hold. So you hold, so you've already bought stocks, it's gone down in value, you just hold. You're wishing to the moons that the value will go up again, and most likely in a lot of cases, yes, it does go back up again. The other one is buy more. So this is a more intermediate to advanced investment strategy, is to buy more. And it makes so much sense, right? When something's going down in value, you just keep buying more, because not only are you rebalancing your portfolio, but it's very likely that it's gone down, it's going to go up again. So yeah, you would buy more. So I definitely would buy more. Now, okay, this is a very good question. How big a loss is this investment? Okay, maybe if I could read English, that would help. How big a loss in this investment can you sustain before it negatively affects your future standard of living? So of course, £125, if that was something that I really needed, it would affect me. But of course, it's very limited loss. It's almost not a loss if I lost all of it. I'm willing to lose all of it. Another question. I prefer a guaranteed rate of return to uncertain return. Ooh. I think human nature calls for guaranteed rate of return over uncertainties, but I would say disagree. Uncertain returns are fun for me, so I'm going to go with disagree. Will you need to withdraw any funds from this investment within the next 5 years? For me, it's no. Which financial instruments have you invested in before? So I've done ETFs and shares. So some experience, not really a lot. Remember, this is not financial advice. And as you can see, InvestEngine is working and it's coming up with this graphy type thing. So as you can see, within the next 5 years, this is what my projection is. So exceptional is this blue one, expected is the green one, poor is the grey one. And actually financial model predictions are very accurate within their boundaries, so it's very, very unlikely that it's going to go under worst case. And it's also very, very unlikely that it's going to go up to the exceptional case. Most financial models are quite accurate in predicting the upper and lower bound. It's almost never above the upper bound or below the lower bound. So the green area is kind of what you're looking at. So let's see, if I put in £125 in 5 years, assuming I don't put in anything extra into the portfolio, I'm looking to about, what is it? Yeah, about £200 by doing nothing. That's pretty great. And here it allows me to add monthly investment. So if I wanted to put £100 a month, as you can see, this is the beginning of an exponential curve. If I put £100 a month, look how much my return goes up. So actually £100 a month for 5 years is what? Is £1,200 times 5, which is less than 10 grand, right? But look at the returns you're going to get. So just by adding £100 a month, you can see that the returns are expected a lot more, right? Look at this green area. So definitely when you put in a monthly investment, even if it's something, let's see, £10, even £10 makes a big difference. We saw that without the monthly investment, we'll get something around £200 at the end. So with just a £10 investment monthly, which is only £120 a year, you're looking at around £900. See, it's crazy. It's crazy. You should do it. It also tells you this risk bar. So if you do not like risks too much, you can expect, let's leave the £10 a monthly investment, and you can expect around £700-ish for the end of 5 years. And you might be thinking, 5 years is ages, but also in 5 years your financial situation might improve and you can put in more monthly, but also we can increase the risk. So let's go all the way to the end. So you can see by increasing the risk, you're looking at around £900 in 5 years. You can also increase the time period. And look, here we see the first shape of an exponential curve. So you can see that if you invest literally just £10 a month and an initial deposit of £125, within 30 years, which yes, it's a long time, you're looking at roughly ballpark at least 23 grand. That's crazy, right? That is literally crazy. £10 a month. Why wouldn't you do it? Obviously high risk, but let's go to medium risk. You're still looking at around 15 to 20 grand for £10 a month. Like, honestly, just do it. Also, you can check the allocation of your fund. So this is what they put it into. So 64% equities, 30% bonds, alternatives. Yeah, there's just so much detail. And if you want to break it down further, you can see where the equities are. So FTSE 100, Nasdaq 100, aging population, iShares, Invesco, iShares, X-Trackers. Bonds in Vanguard Global Aggregate Bonds, all these other bonds. And the alternatives is physical gold. Like, it's quite a diverse portfolio. Granted, is this one high risk, or I think this one's medium risk. So yeah, they do all the guesswork for you, and historically this would have cost you thousands of pounds having a financial advisor, and they actually do this for free. So currently it's looking very good, and I'm going to go back to my dashboard and quickly check the second option that we could have chosen, which is income. So we looked at growth and income. Let's look at income, okay, and I'll decide where I want to put my money. So again, £125. What proportion of your total investments represent? 0%. Annual income, let's do that same. Invest short term, buy more. Will you need withdraw? Nope. Are you prepared to accept losses of more than 10%? So losses of more than 10% is acceptable for me. That's completely fine. How much of your overall income needs do you expect this portfolio to provide? Less than 10%, of course. Which of these have you invested before? ETF shares, continue, and InvestEngine is working again, and we will see what we get at the end of this. Okay, cool. So this looks easier to actually read, or maybe I preferred the graph before actually. So there's less risk and there's more risk. So initial investment of £125 will net you around 1.3%. And is this per year? So 1.3% per year. So just by putting £125 in, I can expect to get around £1.64, which is not a lot, but I can increase the risk. And you can see that, yeah, so 3.3% returns is not looking too bad. And so you can also check allocation like before. So this is actually investing in S&P 500, FTSE 100, and all these different bonds. So yeah, you can make a decision to whether you want to put like a lump sum in and kind of get interest per annum, so annually every year. This looks kind of boring to me, to be fair. Like, yeah, it looks quite secure maybe, but I like the other one, the growth one. So I'm gonna go back and put some money in that. Okay, so let's do that again. My dashboard, add new portfolio, create managed portfolio, personal growth. Okay, I'm gonna have fun this time. So I would like to invest £125. So do that. What proportion? 0%. Annual income, that. Short term, maximizing profit, buy more. A large loss will have no impact, so let's do that. I prefer guaranteed return. I'm going to disagree again. Will you need to withdraw funds? Nope. Shares, ETFs. InvestEngine is working again. It doesn't even take that long, actually. It's quite fair. Okay, you know what? I'm going to have fun with this. I'm literally going to go max. Gonna go max and put 2 years. Shall we go for 2 years? You know what? I'm going to go for 2 years and put in £125 and no monthly investments. And let's just quickly see what the allocation is. 90% equities, 4% bonds, and 6% alternatives. Let's find out more. So emerging markets. Ooh, emerging markets is a big risk, I would say, because it's not doing well so far. AI, okay. iShares World Small Cap. Okay, FTSE 100, that's pretty strong. Nasdaq 100 is quite strong. Aging population, I don't usually invest in that, but let's see. X-Trackers Russell 2000, I'm not too sure what that is actually. S&P 500, MSCI World, I'm not sure what that is either. And then MSCI EMU, which is probably emerging markets maybe. And then bonds, UBS, emerging market sovereign bonds, and then gold as well. You know what, I'm very excited now, so I'm gonna do it. So save and continue. It says attention, so it will give you a warning. So it will say you have selected a portfolio that is more risky than one we suggest based on your answers to the risk questionnaire. Although your current portfolio has higher expected returns, it also has higher potential losses than the optimal portfolio. I understand that. I wouldn't recommend this. I would recommend getting this, putting certain amounts in and a monthly amount, and just putting the risk down to suit yourself. But obviously if I lose £125, I'm fine with that. So I'm going to confirm, and your portfolio has been created. Wow, I am so excited. So now if I go to my dashboard, I should have no pounds. Ooh, okay, so there's one called Growth 10. This feels very much like I think that is, so I have one called Enhanced, Portfolio Balance, nothing to show, Projections. Is this the one that I put money in? Did I put money in this? Okay, sorry, a bit confused. The first time I saw this, so this looks like the new one. Yeah, this is one I invested in, but it has £0 in. Anyway, I'm going to give it some time. If I go to analytics, I think it just takes time for it to start. It doesn't look like Anyway, it's been created. So I'm definitely going to do a follow-up video to this, and I'm very excited to see how it does in the next few months. Obviously, in a few months, it's not going to make a big difference. I still want to make up a follow-up video and see if this platform, InvestEngine, is worth it. Currently, I think it's really good. Like, compared to free trade, it just makes things so much easier, and the fees are low, so let's hope the company doesn't increase their fees. I wouldn't currently recommend making your stocks and shares ISA with them, just because they're quite new, and new companies often change the rules quite a lot. So if you want to make a stocks and shares ISA, I would actually recommend just going through Vanguard directly, because they're very easy to use, and historically they've been great. Now, I have maxed out my ISA on free trade, and even though they're a new company, I don't know why I made that decision, but I'm still happy with that. So definitely, if you want to check out free trade also, I won't receive anything from that, but I definitely highly recommend that. But InvestEngine seems very good with very great fees, and this whole algorithm thing makes it really fun to invest. Always remember that your capital is always at risk. You can lose more than you put in. And remember that this is not financial advice. And also remember that YouTubers that are sponsored might have a second agenda. And even me, I might have a second agenda because I'm putting my affiliate link down below. But I really do wholeheartedly think that everyone should try, maybe even put £100 in. And I think I'll receive £25 and you will receive £25. So why not? So I know this has been a long video, and I actually really love making these videos more than anything. So I think I will continue down this investment route. If you're new, subscribe. Comment down below. It's so fun, like to reply to comments, so make sure you do that. And as always, thank you for watching.